And this is something where the Europeans are lagging behind the U.S. This is where this has been discussed for quite a long time, specifically also because the West is facing a 1 p.m. close. They want to trade a lot longer. So this is something that has been looked at in the U.S. And of course, it rose in prominence given the crypto trading, which trades 24 hours, and they really want to cater to the investors that they might be losing to that market, to that fairly unregulated market, and then, of course, to the market in the U.S. overall. So hopefully more liquidity coming to Europe as a result of these actions.
Well, you say hopefully. I think hopefully depends on who you are here, because it was just a few years ago, Jan 2020, that we were talking about a story that fund managers in the UK and banks in the UK were pushing for shorter trading hours.
Even shorter?
Even shorter. Back in 2020, the Association for Financial Markets in Europe, which represents banks, the Investment Association, and speaks on behalf of asset managers, wanted the LSE to open at 9:30 and close 7 hours later. They argued that it was bad for work-life balance to be open at the amount of hours that they are now. And here we are talking about 24-hour trading, which I think, to your point, you make a really interesting point that part of this could be because traditional equity markets are losing share to crypto markets because you have younger, mobile-friendly traders opting for crypto, maybe in part because it's always available. And so this clearly is a play to appeal to younger traders. But what does it mean for traditional fund managers, for institutional investors who might want the exact opposite?
No, you're absolutely right. And then, of course, huge regulatory concerns, technology concerns. So if this 24-hour trading when it comes to equities actually is put in place, what technology platform does it run on? Will it have to be something blockchain related where stuff is tokenized, and who supervises that? And what about ad hoc announcements? What about, some of the other liquidity issues? Where's going to be that liquidity lull that we usually look towards when it comes to the end of trading in the U.S., the start of Asian trading, when the European traders are not around that? Do we see any liquidity lulls? Is that a good thing? Is that a bad thing? We're always on, Juliana. That's the end of the story. Always on.
Always on. Everybody's always on now. And I think, again, your point about crypto is such an interesting one, because over the weekend when headlines hit, and we're now used to an environment where President Trump, we had Ganesh, one of our reporters, reporting last week that there's only 1 hour of the day where President Trump is largely quiet, and it's from 3 to 4 a.m. Eastern time. Other than that, it's fair game. He is out there posting on Truth Social at all hours of the day. So I think the work-life balance when you're a market participant right now has really gone out the window. But a lot of investors then, when news breaks over the weekend, they look to Bitcoin to see how it's trading. Because
is that the best indicator, though?
It's the only one in some cases.
It's not a great indicator, though, because we don't know whether it behaves like a risk asset or whether it's a safe haven instrument right now. It doesn't really quite know what to do with itself at this point. It's really just higher on the basis of more positive regulation coming out of the U.S., but I don't know whether it's a good risk indicator at all.
No, that is definitely a fair point. I think, broadly speaking, what do we think of crypto? But just as an indicator of weekend trade, people use it as a proxy, I guess.
You're right.
But I think a flawed one, to your point.